Welcome to another stage analysis video. It is Wednesday the 27th of September 2023. I'm going to start off the midweek video today by discussing the Nasdaq 100 again. I highlighted this in the blog post yesterday, in the members post. Obviously the non-members would have only seen the charts, but we had a little bit of commentary about obviously how the base structure is developing and the current position. So I just wanted to go into that in a little bit more detail. Position at the moment of the percentage of stocks above their 20-day EMA says 8% here, but that was the day before. Stock Charts is having a problem updating it tonight, so you can see it's still saying 8% now. We're 3 or so hours after the close. So there is another way that you can look at this data. If I quickly go through to the scan workbench in Stock Charts, you can actually, by naming the group Nasdaq 100 and then doing the daily close above the daily EMA 20 daily close, and then you can run that scan, and then it will give you the results. So there's only 15, it's jumped up to 15% here, as we can see. So if we go back there, you could do the same for the S&P 500. You can uncomment that and use the same code and run that. And the S&P 500 is at 70, which is at 14% off the top of my head there. So basically, going back to the Nasdaq 100 here, you can see that will have poked this up a tiny bit here, back into the middle, but we're still in this lower zone. But you can see we're still obviously in this, obviously the lower extremes of where the percentage of stocks above its 20-day EMA gets to in general times. But what we look for with this is a reversal back through the key 30% level, and when it goes back through the 30% level, we want to see a breadth thrust as such. We want to see it quickly when it's especially when it's coming from a potential spring area. We want to see that short covering rally. We want to see that strength come through. We want to see it go directly back up to the upper area again. So at the moment, see deeply in the oversold range at the moment, but only just a small turn today with the potential spring attempt so far. So I talked about, as I said, talked about this yesterday, positioning. We're in obviously stage 2, getting into a potential position where it could start to turn towards stage 3, but it's currently only on the borderline, so of early stage 3. You can see we're still well above the 200-day moving average here. So if you flip the chart, for example, and looked at this from the other end of the scale, you wouldn't be considering this even in just coming towards potential early stage 1 at this point. You've got the stage 4B minus type look to it at this point, so it'd only just be getting towards potential early stage 1, but not there yet. So at the same end, the stages are opposites of each other, so we'd still be in what we call stage 2B minus here, so not yet stage 3. We've got that. Turn this, get this right, mess this up now. Get this back on, so you can see that the position at the moment, we've been testing the August low now for 2 days. You can see it stopped totally on it on the prior day on Tuesday here, and then today we've moved below it and then actually managed to pull back up. So we've got an attempted spring attempt today, still closed, obviously only a plus 0.24%, so nothing dramatic obviously at the moment, but 2 days now where it's attempting to stop at these August lows, and we've got this ABC type correction at the moment, still in stage 2. So if we move on to the S&P 500, similar kind of prospect with this one. You can see has pulled back. So we had a 6% pullback, and then we've had a further 6 to 7% pullback. So again, ABC type correction at the moment, back towards its 200-day moving average. It did on the futures chart actually hit its 200-day moving average yesterday, as well as the year-to-date anchored VWAP. So the spot chart here, a little bit different, still just over 1% or so above the low today, above the 200% simple moving average there. So still in a short-term downtrend, and we define the short-term downtrend as below the minus 180R level here. So although it's dropped out of this recent base structure here. It's still in stage 2, starting to move out into stage 2 earlier in the year, late March, and then fully in May as it started to push out more strongly. So it has come back in again, and it is starting to show some signs where it could potentially be early stage 3 here. See on the weekly chart, we've got the potential, we've got the move below the 30-week moving average this week. Not yet a close below, we've got the rest of the week to go, but with the move below, got a change of behavior on this, so we would consider this potential early stage 3, but that doesn't mean that that's immediately gonna drop down to stage 4. Stage 3 can be a very long, drawn out process, and early stage 3 tends to come with a bounce. So as the demand comes back in, it hits the moving averages. You can see it wouldn't be in stage 4 yet, as we're still above the 200-day moving average. So even though it's broken down from this recent base structure, obviously seeing people marking it as a head and shoulders, whatever you want to call it. Obviously, this was the change of behavior. So it's broken down from this base and still above a rising 200-day moving average here. So looking for some kind of rebound attempt in this one. We go back to the Nasdaq here quickly. So this is a potential spring, but not a very strong one at the moment. We need to see some follow through. So a move close back above the high of the day today. Obviously, when you get spring attempts, the entry point on a spring in phase C. So if this is phase C, so potentially you've got the buying climax, automatic reaction, secondary test starting to roll over through here. So it could just be a spring attempt in phase B still. It's a little early for potential phase C, but could turn into phase C. But at the moment, obviously what we'd be looking for is a strong, obviously, rally back up towards its 21-day moving average, some kind of higher low test, follow through the 50-day, obviously sign of strength rally back up and out if this is a spring. Obviously, if it's very weak and it can't get back above that declining 21-day moving average, starts to roll over, or whether it chops sideways here and just drifts and starts to roll off, then obviously a 200-day moving average test would be on the cards at that point. So at the moment, it all depends on how strong these next few days are, and whether the short covering rally attempt comes in, or whether there's further supply comes in and starts to roll this over. Go again to the Russell 2000. There's a little bit of strength in this today compared to the other indexes, 0.93%. So it has come off quite a lot more, has had more of a head and shoulders type pattern to this one to roll over. So it's dropped below, still below the bottom of that range there, and well below the 200-day moving average. So it's been underperforming for a long time here. Still got a 3% move to get back up to that 200-day moving average here, and still within the broader context of the range. So at the moment, we'd still give this the benefit of a doubt as a failed stage 2 attempt that came back into the stage 1 range again for a second time. So we'd give it a stage 1 minus at the moment. You can see the percentage of stocks is says 13.83% at the moment. Again, that will have improved today. So I'm not sure if we can get the Russell 2000 on the test here. So let me just put that in. No, I don't think you can get the Russell 2000 on that one. So you'd have to do it in other ways. You can use the S&P 600, which is the small caps, which is a good enough proxy for that January. So 142 today divided by 600, you've got 23.6% there. So if we go back to this, you can see it has had a 10% potential 10% bounce there today. So showing some strength, but again, we want to see if it does cross back through that 30% level. We want to see a strong move immediately back up towards the upper zone. We want to see real strength coming in, a breadth thrust, as that's what you tend to see when we hit some kind of swing low. If you're not getting that kind of strength and it just rolls over, then obviously it's potentially not a major low and just a further minor swing. Look at the QQQJ. Haven't shown this one for a little while. So this is the Nasdaq Next Gen 100 ETF, and it's basically the Nasdaq second 100 stocks. So not the 100, it's the 1 to 200 type stocks, more mid cap. Still, majority of them are probably still large cap, but they are the secondary stocks. It includes some of the it tracks more with the growth ETFs, so like the IBD 50 and the ARK-K, etc. Those kind of indexes. So this is a good proxy when you're looking at the growth type stocks and the broader Nasdaq, because it's still a fairly good index to look at and quite liquid most of the time. So at the moment, year to date has not done too well. Though you can see the difference in this compared to what we've had with the Nasdaq 100, which is still up, obviously over 33-34% at the moment. So if we look at this since the 3rd of January here, so it started off, it's only up around 1 to 2% at the moment, very similar to what you see with the IBD 50. So if we get that one up as well, you can see although that looks worse percentage wise since the year to date, actually started off down here, so similar kind of percentage, just around 1% or so. So they're in a reasonably similar position, and your ARK-K probably similar to that as well. Look at that. So actually doing a bit better by comparison to those, actually up 22% at the moment there. So significantly better than both of those, but still underperforming versus the Nasdaq 100, for example. So if we go back to the QQQJ, you can see this on the year-to-date basis here. It's basically been going sideways in stage one. It had a few early stage 2 attempts, failed, similar to the Russell 2000. Obviously, would have been stopped out. Investor stop loss, obviously shorter-term stop losses coming back under the breakout level. Made a further attempt here, started to go out again, and then rolled over once more. So it's had multiple failures to move out into stage 2 and has come back into this broader base structure. So at the moment, current base structure still within the year-to-date range, not really going very far. Move on to the VIX. You can see this had a double top the last 2 days, so ran into the August high there yesterday and has reversed back against this today, but still above the 200-day moving average, which is flattening out here. So if it starts to come back underneath that, obviously would be a good positive, and you would then obviously expect strong spring in the market. But if it fails to get back under this 200-day moving average and chops around in here, obviously we would then be looking more negatively on this.